As a self-employed person in Singapore, you will need to handle your CPF contributions, especially the compulsory Medisave contributions and the payment of taxes yourself. If you're an employed person, a lot of all these things are actually handled by your employer, so count yourself lucky. But if you're self-employed or a business owner like myself or a freelancer, here are some important tips about contributing to CPF that you definitely need to know, especially if you're earning quite a little bit as a freelancer or self-employed person. These tips I'm about to share you can save you a lot of money in taxes. Let's go! So firstly, what is a self-employed person? A self-employed person is basically like your freelancer or somebody who is self-employed. Basically, an employee works under a full-time contract of a company. You get certain benefits, CPF contributions by the employer. As a self-employed person, you handle everything yourself. Self-employed people are like freelance tuition teachers, private hire drivers, actors and musicians that do gigs, plumbers, photographers, videographers, influencers, and even YouTube creators. So there are more and more self-employed people, especially post-COVID, right? People are really finding that, oh, a full-time job is not fulfilling and they're starting their own self-employed thing. So more and more people in Singapore are actually becoming self-employed. Now, do you need to register as a self-employed person, like when you're registering a company with ACRA? The answer is you do not actually need to. As long as you declare your net trade income to IRAS and your net trade income to CPF board, and you make Medisave contributions under the compulsory contribution, then you're naturally considered a self-employed person, so no registration is actually needed. Now let's talk about CPF for self-employed people. The first thing that you need to take note is that there is this compulsory Medisave contribution as a self-employed person. This is compulsory if your net trade income exceeds $6,000 per annum, which I think is most of us, because if your net trade income does not exceed $6,000 per annum, I think it's quite hard to survive in our country, Singapore. The contribution of the Medisave amount largely depends on your age as well as the amount you earn. Assuming you are 35 and under and you are making above 18,000 per annum, you will need to contribute about 8% of your monthly income to the compulsory Medisave contribution. If you're unsure of how much Medisave you need to contribute, you can use this CPF calculator to calculate exactly how much is required based on your annual income. Medisave is actually quite useful, especially to cover certain things such as emergency hospital or medical bills, and it can even cover a certain percentage of dental. For example, you're going for a wisdom tooth extraction surgery, a percentage of that can be covered by Medisave as well. Some of your insurance policies like your integrated shield plans can also be paid using Medisave. So while this contribution could seem like a bit of a drag, could seem like a bit of a troublesome thing, Medisave could come in useful over time, especially when your money inside Medisave is not just sitting there, it is earning you interest as well. Next, very commonly known as the RSTU, Retirement Sum Top Up. The RSTU is not compulsory, it is fully voluntary. The RSTU is a special tax relief scheme that allows for you to contribute up to $8,000 into your special account if you are below 55 years old per annum. And by contributing this $8,000, which by the way, previously was only $7,000 limit, now it has increased to $8,000. If you contribute this $8,000, you will earn a tax relief of $8,000. If you are below 55, by contributing to your RA, this $8,000 that you're contributing every year will earn you a 4% interest, which is pretty good, right? Beating inflation some more. And if you think $8,000 is not enough, you can also do an additional $8,000 contribution to your family's CPF account as well. Contribution to family members are limited to your parents-in-law, your grandparents-in-law, your spouse, as well as your siblings. However, the siblings one, in order for you to be eligible to contribute to your siblings' CPF, your sibling must be making below $4,000 per annum. If not, then you cannot do that. So by contributing $8,000 to your own CPF SA and $8,000 to one of your family members one, you will earn a total of $16,000 of tax relief maximum. You cannot go above this. So I think $16,000 of tax relief is quite good, and most self-employed people who are quite savvy with CPF actually do this. Personally, highly recommend that you consider doing this as well. Next will be your voluntary CPF contributions to your OA, SA or MA. So in order to be eligible for this, you will first need to have a net trade income. Basically, you need to make money. If you don't make money, you cannot do this. But Then again, if you don't make money, then you don't need tax relief so you don't need to contribute, right? The limit for self-contribution to CPF is the lowest of these three, either 37% of your net trade income, or $37,740, or the actual contributed amount in your previous year. So let me give you an example scenario to sum everything up. Assuming you make $100,000 this year and the year is ending, $100,000 is your net trade income. The maximum tax relief of 37% will be $37,000. So assuming you are below 35 years old, 8% will be contributed compulsory to your MA. That's $8,000. You can also take note here that your retirement sum top-up of $8,000 is not counted into the 37% of the voluntary top-up as well. Okay, so if the total amount that you can contribute is $37,000, you need to minus away the compulsory contribution of $8,000 to your MA. That leaves you with a total of $29,000 that you can voluntarily contribute. And you can take note here that the retirement sum top-up, the RSTU top-up, is not included in the 37% voluntary contribution. So that is additional. So your total CPF tax relief would be $37,000 of voluntary plus compulsory MA top-up, plus potentially $8,000 of retirement sum top-up, which will get you a total of $44,000 off your total net accessible income. So $44,000 of total relief from your income tax, which I think is pretty amazing. And this is the maximum you can go. Even if you have more money that you want to put into CPF, there is a limit to how much you can contribute, and the above is the limit. CPF contributions is pretty good because it provides tax relief, especially for those of you making quite a lot of money as self-employed people. At some point, you are going to realize that, how come I pay so much money in tax? And the thing about contributing to CPF is, yes, the money is sort of locked up. It is not exactly very liquid, but at the end of the day, it is your money. And this money is not just yours, it is making interest inside your CPF, your MA, your SA. Whereas if you're paying tax, the money is lost forever. It is given to the government. You're contributing to the country, which is also very good which is also very good. You have to pay tax by the way. Don't do tax evasion, and don't forget to report your income tax. So please pay tax, but at the same time, you also want to maximize it, right? Such that you don't pay too much tax, and contributing to CPF is a way to gain that maximum tax relief. Overall, my personal tip and advice is don't go for the maximum contribution as well. Please consider your personal finance position. Maybe you have a big ticket item coming up, your house, your renovation, your wedding, your car, going for a honeymoon and stuff like that. You want to keep some of your money liquid. By doing a lot of contribution to your CPF just for the sake of doing it, right, will lock up your money inside CPF. Yes, it is very good, it's earning interest, but what if you cannot pay for the thing that you need to pay for? Maybe your tuition, uni fees, or you're taking a master's degree, or you are doing your renovations. You need to calculate your finance and ensure that your position is good before you go and do the maximum top-up. So top up what is required of you. Don't always go for the maximum for maximum tax relief. Another tip is that a lot of self-employed people always wait until December, then they do the self-top-ups and the top-ups, because you have to contribute by 31st December to be eligible for the tax relief for that assessment year, which you will pay in the upcoming year. So for example, in 2024, if you have contributed to your self-voluntary top-ups, you will enjoy the tax relief for assessment year 2024, which you will pay the tax in 2025. So my personal recommendation is don't wait until 31st December. Try to do the contributions in January, around this time. Why? Because when your money is being contributed to CPF, it is immediately earning you interest. Like in your SA, it's earning you 4% interest, right? So why do you want to wait until 31st December, when 12 months have passed, when you can actually do it in January and make that interest and start rolling that interest, right? And of course, administratively, settling everything early rather than waiting for the last minute is always better. If you already have a plan, then just go ahead and do it, right? So that is CPF contributions for tax relief for self-employed people. Again, everybody's situation is different. Do not go and contribute the maximum just because you want to get the maximum tax relief. Really analyze your strategy and think about your financial timeline in the next 1 year, 2 years, 3 years, 4 years, 5 years. Does it make sense for you to do the maximum contribution? For those of you making an insane amount of money, please contribute the maximum, because the tax relief really will come in very handy one. When you reach a certain tax bracket, right, you'll realize that, wow, I'm paying a lot of money in tax, even though Singapore tax is one of the lowest ever. And as a self-employed person, you also have the option to go and incorporate a private limited company, because corporate tax is much lower than personal income tax. I actually did a video with my friend Chris Honeymoney to talk about whether you should incorporate a company in Singapore or not. I will leave the link in the description, you can watch that video. And once again, my name is JJ. If you are interested in starting businesses, personal finance, and just getting your life together, freelancing, self-employed, I make a lot of videos about that. You can give me a like, follow, and subscribe, and I will see you in the next video. Peace!